welcome back. We are at day 5 of Travel Agency in a Year, and this episode is going to continue with the annual business review, setting your goals for the next year, and kind of coming up with the very bare bones of your overall plan of how you want your travel agency to look next year. So, this episode is going to be all about finances and your financial review. You're going to need the gross revenues for the previous year. Even if you're like less than a year in business, I highly recommend you do this. And we have a whole like workbook inside the Success Circle if you'd want to join to have the materials to help you get this all organized. This episode does, like I said, many of these episodes coincide with things inside the Success Circle. So, anyway, you're going to want to have your gross revenue from the previous year. And that is the question I've been hearing a lot is what is gross revenue and what is net revenue? So, gross revenue is your earnings that are deposited directly into your business checking account. Please don't put it in a personal checking account. Please, please, please. Before any expenses are paid out. Now, this is after your split. I wouldn't count if you're a hosted or a sub agent and you have a split. I wouldn't count that like $1,000 commission before your split as $1,000 gross revenue because you don't write that off. You don't receive that difference in income. Like you just get if you're 80% with $1,000 commission, you just get the $800. You don't have to pay anyone that $200 difference, okay? So your gross revenue is everything before anything that you pay to operate your business. And your net is everything after. And so at tax time, well, it really depends on your state and how your business is structured, but they're going to kind of base it off of your net and any possible deductions that you might qualify for. We're not going to get into taxes. We're not going to get into CPA stuff. I'm not a CPA. But the basis is gross revenue. You're going to want that information. And then you're going to pull from your accounting software. Hopefully you have accounting software. If you don't, I recommend at least creating some sort of spreadsheet or something to track your expenses and categorize them. Most business checking accounts now do offer like kind of a simple expense report that you could generate, and then I would double check that everything's categorized correctly because a lot of that online banking will just be like, oh yeah, this is a meal expense when you're like, no, this wasn't a meal. Or they'll be like, this is an office expense, but it wasn't office supplies. So you want to like make sure that it's categorized properly. If you haven't been doing this and you're brand new, it's going to make your life a lot easier at tax time / your CPA's life a lot easier at tax time. And B, it's going to help you see exactly where you're spending. So it's pretty similar to a household budget. Like your biggest and most regular cost is going to be like any host agency fees. That's going to be a regular occurring fee. Any software you use, those are going to be like your rent or mortgage and like fixed costs, which I'm about to go into fixed versus variable because I know some people in the Success Circle were like, wait a minute, I don't know what that means. So have all of your gross revenue, the money that was deposited into your business account, have all of your expenses categorized so you can look. And if you need to, you can either have your software create like a pie chart so you can see, whoa, or you can write it, like put it in a spreadsheet and then have a formula to see what percentage of your revenue is going towards specific expenses like software. Office supplies would be like pens, paper, ink, if you print a lot of things. If you ship things to people, those shipping costs would be a separate category. If you are entertaining clients, there's like meal costs there. And if you're like working late and you're like, I gotta order pizza, and you're like in a hotel or something, that's a different type of meal cost. And then there's like travel costs. There's so many different categories. I'm trying to think of all of them off the top of my head. If you have to buy a new laptop or computer in general, if you have a separate cell phone or like a Google Voice service, something like that you pay for, that's going to be like a utility cost. So have all of that categorized. Now, fixed versus variable, what the heck does that mean? A fixed cost is something that does not change and it is reliably, like, think of it as like rent or mortgage. Like you signed a lease or you signed and closed on a house. Hopefully, you have a fixed APR in your house. Or like you purchase a car and the payment plan is like X amount per month and it does not change if you have a fixed APR. So fixed means it does not change. So other things that are fixed costs, like from a household perspective, are almost always like your host agency cost is like a regular monthly fee. Your if you're hosted, or even if you aren't hosted, but like your annual Florida seller of travel licensing is, it has unchanged for me the entire time I've been in the industry, so I know that's a fixed cost. Um, Something at home would be like your cell phone bills, pretty much all the same, unless you decide to like finance a phone or like do add something to your plan. You know that it's going to be like whatever your phone plan is. I'm not going to tell you mine because it's not very expensive. Any streaming services, they will all send you a notification like, hey, we're going to increase rates, but they typically send you an email several months prior to let you know. Okay, so those are fixed costs. Variable costs are things that can change. And if you are struggling to budget and you're like, I can't make a profit in this business, the first thing you need to look at are your variable costs and see how important are they? Are they generating a return on the investment that you made in those products or services? And should you cut them? Okay, so that could be things like you took an excessive number of fam trips because you didn't know what niche you wanted to be in. Maybe you're still undecided with your niche, but that ended up costing thousands of dollars. That you don't have to go on these fams. You don't have to go on every single fam. Or maybe you signed up for a lot of courses and you still haven't started on them. Like, probably shouldn't be spending that much money next year investing in courses if you haven't even completed what you've already paid for. Okay? Those are things you can change. You might be able to, your E&O insurance can change based on your sales volume. And so let's say you've been in the industry for a while and you had a major personal issue that's like caused your sales to dip for like a year or two, which is going to happen in people's lives. And you might be able to contact your insurance agency and get a lower E&O insurance rate because your volume of sales is lower. So those are some examples of variable costs that you have a little more control of shopping around. Or let's say you use a specific travel CRM and you're like, wait a minute, this other product from yesterday, you got the pricing for this other CRM that has more automations you'd like to implement, and it's going to end up being a lower cost for you. So you're like, oh, I could switch. That's like a variable. It's not set in stone. Things that are set in stone are typically going to be like your E&O, your Florida seller of travel. Like if you decide Google Workspace, that's going to be set in stone until you decide to change to Outlook, or you know what I mean. So you want to have all of these written down, categorized, and sorted out. From there, let's take a look at what do you need to invest in this year. Do you need to invest in a simple email newsletter CRM? And again, yesterday we talked about it. There are some that are free. If you have like Goose Egg for an email list, you could start with the free ones and then upgrade later on to the more popular paid ones. Also, what do you want to invest in this year? Your wants should not surpass the needs of your business. I did a webinar years ago where I was like, your business is like raising a child. You have got to get it to survive the first few years, and then it's going to do toddler mode, crazy discombobulating, because you're scaling typically at that point, and you've got to like revamp a lot of things. But you have to put your wants aside, like wanting to go on all the fam trips and the conferences. If it doesn't really make sense for your business, and even if it does, but you know you probably can't afford it, you can always contact BDMs and network with them via phone calls or Zoom meetings. Okay, so what is the cost of the software and automations upgrades that you took note of yesterday? What is the cost of that? And is it something that you can see in your budget? Once you look at what your spending is and you're like, okay, well, I spent money on all of this. It didn't produce a good return on my investment, so I'm not going to continue spending in these categories for a minute, and I can allocate these funds towards upgrading. That is something you need to take into account before you make a decision on if it's absolutely necessary for you to pay for these upgrades. I also don't recommend, you do you, but I don't recommend waiting on these or investing in the pay annually, especially if you're like, I'm not sure if I want this software, but I'm really tempted. Because if you pay that annual fee, if you hit past the 14-day trial, you're not going to get your money back. You're just stuck with it for a year. Whereas if you do monthly, yes, it is slightly more, like $5 more a month. But if you're just trying to decide between two CRMs, let's say, you could do the free trial for 14 days, just sign up for a month. And even if you forget to cancel, because let's face it, we all sign up for subscriptions, we all forget they exist. And then we forget to cancel, and then we're like, what's this on my bill? Doing it monthly is going to be much easier for you to just be like, well, I'm canceling this. Because if you miss that free trial and you drop $300 on something that you forget to look at, and you decide you don't even want, and you miss that free trial, you're out $300 versus $30. So that's just my take. You can fight me on it. I don't care. All right, so everything in this episode and everything that I talk about with regards to finances, I'm not a CPA, I'm not an attorney, I am just a travel advisor and entrepreneur. I do base this off of the profit first method. The first, I think, 5 years I was in the industry, I had no real method of making sure there was a profit when I was scaling. And I was doing I got this more money. I'm going to, you know what, this audio might be terrible. Oh, I got more money. I'm going to invest in these things and invest in these and quote unquote investments. And then when I read Profit First, I think I got it at the beginning of the year, and I read the book and I looked at my previous year's numbers. I made $55,000-$60,000 that year, something like that. My take-home pay was only $19,000 because I was just blowing money on stuff, and I'm like, oh my gosh. So you're not alone, is what I'm saying. So back to our example agent, honeymooner person that brought in $10,000 in this previous year is setting a goal for $30,000 next year. Okay. If you base it off of the Profit First method, which I will link in the description. It's just Profit First. I cannot remember the dude's name. It's a book. It changed the way that I manage my accounting. It makes it so much easier for me when deposits come in, how to allocate all my funds, and it's 5 seconds of my life anymore. Okay. With the Profit First method, don't quote me on this, read the book. I believe the first 125,000 could be the first 250,000. 50% of the gross revenues needs to be your pay as the business owner so that you can have a sustainable living. I believe it's 125,000, and then once you get between 125 and 250, it goes down to 35%. So if you made $10,000 last year, were you able to give yourself $5,000? Now that $5,000, depending on how you have your business set up, you could do it through payroll if you were an LLC with a sub-S filing, but I know the majority of you are LLC sole proprietors. you are liable for the taxes on that $5,000 your business gives to you. It's an owner's draw, whatever. So, but did you have $5,000 to pay yourself? Plus, do you have money for taxes for your business? Plus, do you have money for a profit? Plus, do you have money for all of your expenses? The other $5,000 of that $10,000 is business taxes, all of your business expenses, and a reasonable profit. So, trust me, most of us aren't in that position at first because we're just like, oh, it's money, no big deal. When you read this book, it will blow your mind. So, with that in mind, your goal for next year being $30,000 in gross revenues, you can expect to pay yourself $15,000. So if you hit your revenue, you will have $15,000 in gross revenues to operate your business. Okay? And if you are, I wouldn't do a, personally, again, not a CPA, I wouldn't do a sub S filing myself. If I'm only bringing $30,000 in gross revenues, it just doesn't make sense because you have to be on payroll, and it just doesn't make sense. So, because you have to pay payroll taxes, like you are your employer. Anyway, that's neither here nor there. So, we don't know for sure if you're going to make that $15,000. You need to look at what your sales are for next year, what you already have on the books for trips traveling. And hopefully you've got a few people going next year so you have like something to cover your expenses. And you can start bringing in more revenue with the new marketing strategy and all the fun stuff we're going to get into. It's way more in depth than the Success Circle. So, highly recommend just joining that. Anyway. All right. So, can you afford these software upgrades based on the revenue you brought in last year and based on what you already have booked for next year? Does that at least cover your operational expenses and give you the opportunity to upgrade? If it does, you can start to make the decisions to be like, I want to invest in this software. I want to invest in these, whatever things that make your business more scalable down the road. If you cannot, you need to come up with a way to do it as cheaply as possible, unfortunately, or you need to ask someone to invest in your business at this point and just be like, I know I'm going to 3x my revenue. I'm going to need $5,000. I just dropped my pen. Don't worry, I got a whole mug of them over here. So that's something you need to make sure that you can manage the new investments and still pay yourself. It's a lot. But if you spent, let's say you made $10,000 last year and you spent $8,000 on courses and fam trips and things that haven't really produced any business in your business, that's $8,000 you could put back into your business and actually paying yourself. So the whole purpose of this episode is to understand exactly what you're bringing in, exactly what you're spending your money on, and make sound decisions for the growth of your business and not just like what sounds cool for you, right? Okay. We're going to have another episode after this talking about you need some discipline, people. Not you. You're fine. But just how to stay focused, because next week we will be getting more into how easily we get distracted, especially if you have another job and or if you have children at home. It can be a huge disruption. And I'm also losing my voice because I've been talking for 19 straight minutes. And I promised under 20 minutes an episode. So I hope you have a lovely day and hope to see you tomorrow.